We have a 3-day weekend to finally get a break from some very active market news in the ag marketplace. Here for the daily market summary with Aaron Thiele of agmarket.net. And Aaron, what do we see in the grain markets today to wrap up this week?
Today in the grain markets traded a little bit higher. It's been a bit of a volatile and sideways trading week. The corn market's been in that $4.80 to $5 range for the most part on the new crop, and then on the soybeans, we've been able to test up against the $12 range, but haven't been able to sustain enough buying to get all the way through it. Corn's finishing up about a penny right now, as well as soybeans are up about a penny. As well. They were trading a little bit higher earlier in the day, but kind of gave it up into the close here to going into the 3-day weekend.
And then when we get a 3-day weekend like this, do we usually see some sell off, or is the Memorial Day weekend a different case?
I think any 3-day weekend we can see that funds are going to position themselves in the correct way, so we can see we've had a tendency to see big news come out on the weekends, and so I wouldn't be surprised if there was something that came out at some point, whether it's Memorial Day or this weekend. It's just always appropriate with the extra day of no trading that the fund isn't going to get their position or get over their skis too much to where they get caught in a bind. Deals and talks with China, or deals and talks between the Middle East and different conflicts are going on there. It's kind of hard to keep up with on what the news is. One minute you hear that it's they're signing a peace treaty and getting ready to call it quits, and then another source will tell you that no, that's not the case. So yeah, I think they're going to keep that into consideration and make sure that they're positioned well heading into the long weekend.
And like you mentioned, with getting news over the long weekend, obviously the China trade agreement, we kind of are getting drip fed some details from that as time goes on. And wouldn't be too surprising to potentially see more come out over the weekend. But at this point, do we think a lot of the, I would say, market excitement for that news is kind of factored in already?
Yeah, I think so. I think we saw that on Monday. We had pretty rough price action at the end of last week, considering that we weren't seeing any great real trade talks coming out of the summit meeting in Beijing between President Trump and China. But then on Sunday afternoon, we had the news announcement that they were going to buy $17 billion dollars worth of agricultural goods outside of the 25 million metric tons that they committed to for soybeans. So I think that led to the positive price action and the buying that we saw on Monday. But maybe now it's just kind of a wait and see and prove it. We've seen that they committed to buying 12 million metric tons last fall. The initial thought was they're going to buy it in the marketing year. Well, is at the end of 2025. Who knows? It ended up being they have sustained to that, but it wasn't at the end of 2025. It was later on into 2026 in the first part of the quarter. So I think it's maybe just a wait and see of saying, hey, we'll believe it when we start getting some commitments. But I think that it did provide some good price action on Monday.
Then over on the livestock side of things, how do cattle and hogs trade today?
Feeder cattle are seeing another rough trading day today. They are down $6, and then fat cattle was just kind of a choppy trade. There were parts where it was positive and parts where it was lower, but they ended up kind of rallying back into the close. Both had significant losses on the day, but then were able to come claw back a little bit before the close into the weekend. Hogs has been rough. There's been 6 straight trading days lower. And then today, the front months were able to get some of that back, and they closed positive for the first time. So that was great to see. But yeah, the expanded limits were taken advantage of today in the feeder cattle, as there were times where the feeder cattle were down $10.
And then how are those livestock markets feeling as we head into this Memorial Day weekend, which is kind of the unofficial start of grilling season? And we generally see that heightened demand pretty much up until Labor Day.
Yeah, we typically do see that heightened demand. I don't know about you guys, but where we're at, we've had a little bit colder temperatures for the end of May, and so I think maybe that has been putting a little bit of a pause on the heightened demand. But whether it's the inflation going on and the price of things going up has been kind of a challenge. But I would hope to see that we get the Memorial Day and then some nicer weather and some in the peak grilling season and the typical rush or increase in demand help support this market going into the summer.
And then do you think when we get into that grilling season, obviously beef prices are pretty high right now. Have we hit a point yet where we think that the consumer is going to switch from beef over to pork, or will they stay with that beef? Because we do know from just history that when the consumer wants beef, they're going to buy beef.
I think that the consumer is going to continue to purchase some beef. I wouldn't be surprised to see a little bit of transition into the pork side of things, just simply if prices get too high. But the one thing about the American consumer and the beef demand is that it's continued to surprise us time and time again of just what people are willing to pay for steaks and for beef.
All right, Aaron, lots of great information today. For anybody who'd like to get in touch with agmarket.net, how can they do that?
They can visit us online at agmarket.net, or they can call us here in the Wisconsin office at 608-384-5438.
All right, Aaron, thanks again for the time, and we'll talk again soon.
Thank you.